All right, what's going on, everybody? CPI data's come out. It's done. It's over with. We had a fantastic trade closed out today that we'll go over. And in terms of CPI and any sort of economic data, we're at the point in the macro regime where anything that is somewhat expected or in line with expectations is not going to move the markets that much. The only thing that is of concern is anything that is really unexpected. So, whether market participants are expecting weak data, strong data, it kind of doesn't really matter at this point in time. Certainly that can change, but in terms of caring about any economic data that comes out, very rarely do I actually really care or place that much emphasis in it. But as of now, just if something's crazy, unexpected, we'll get a major move. If it's in line with expectations, it doesn't really matter. I feel like markets are shifting towards more geopolitical risk as well as, trade wars and tariffs. And I guess it's not like a shift, but in terms of what is moving markets the most, I would consider that to be the driving factor. Then also, at the end of the video, if you guys care, we'll go over some day trading today. Sort of interesting, sort of not. Kind of pathetic. It turned out okay, but we'll go over that. And so, anyways, let's just dive right into it. So the first thing is OKLO. Now this had a 30% day, 29 and a half. And on the video on Monday, I said nuclear stocks are going nuclear. And we looked at all the nuclear stocks that at least I have on the watch list. Maybe it's like 6 of them or something like that. So OKLO, SMR, 20% day, CCJ, LTBR, 6% day, CCJ looks, fantastic. These are all this is serious strength. So the one that looked the best to me was OKLO, and in that video on Monday, I said, this is how it looked on Monday. I said you may think that this looks extended here, but this is not extended in any way. This is just about to start going nuclear, and I was going to go after this one, OKLO. So I did that the very next day in the morning. I bought calls in OKLO the very next day. So Tuesday, this is yesterday, first thing in the morning. This is how it was looking, rocking and rolling, just blasting higher. So I'm buying calls. So those were August 15 was the expiration, $60 strike price, $8.05. And then throughout the day, it really started selling off. And, I thought to myself, shoot, that's why I hate trading in the first 15 minutes of the day. But how this closed at the end of the day and how it looked, I was super bullish on this coming into today. I thought, this looks really good still. And next thing you know, this goes nuclear up 30%. Now, I didn't catch this whole move, and we'll go over as why I did not. I got out around $63, or was it 62? It was right around $63. And so those calls, I sold those calls for $12.22, which is a 58% gain. And a 58% gain in a matter of a day or two, I guess you would say 2 days. on something that's relatively conservative. Now I know those are out of the money call options, but there was still plenty of time. You know, you can't argue with that. That's a great trade. That's fantastic. Now we'll go over what could I do better with this trade. So first of all, I should have held it throughout the day, which I wanted to do that. The reason why I did not is because what happened to Rumble yesterday. So, before we get off the nuclear energy stocks and we'll go over to Rumble. You know, I mean, shoot, this is an industry and sector to go after, like I've, you know, been saying, you know, for a couple years, to, you know, go after nuclear energy stocks. And that's fantastic. You want to see nuclear energy doing good. It's good, cheap energy, clean energy. It is fantastic. It's a win-win for everybody. So, yeah, stoked to see it. Really happy to see it. Okay, so there's that. Now, the lesson on this one would be to have held it longer, because, you know, I could have turned a 58% gain into 100% or so. So, I mean, these contracts were up to like $17 or more, maybe. I don't know, but I saw today they're around $17, which, you know, would have been over 100%. And that is fantastic. I mean, I'm not complaining by any means. I'm just, you know, always trying to get better with everything. You know, always trying to get better. How could I have got better? You know, clearly money was left on the table on this one. So how in the future do I capture more of it? And the way to capture more of it is with a massive move like this, to be more patient. As something super powerful like this, just be patient, let it rock and roll. But in the back of my mind, I was thinking, you thought that yesterday with Rumble. So, yeah, I didn't want to make the same mistake as yesterday with Rumble. But you know, that's not the right mindset to have. That's not the right mentality to have. So now let's go over to Rumble. So we got OKLO out of the way. Now we'll go over to Rumbles. Rumble, you know, I said, man, this looks fantastic. I said, let's get ready to rumble. You know, so then it opens up like 10%, 12%, something along those lines. I forgot. So this is, you know, this is how it looked. You know, yesterday opens up like 10% higher. So, you know, massive move, right? And so I have the same mentality with that I did this morning with OKLO, and thought, this is massive strength. You have to hold this. You cannot get rid of these right now. Although in my video, you know, I said it right around the $10 price target is a pretty obvious price target. However, it gapped up to basically $10, and so, you know, you're saying I'm saying to myself, this is massive strength. We have to hold this. And then it gave all of it back and even closed down on the day. So, I mean, that's like a 12% move to the downside after opening up big, right? So then, like, dang it, why didn't I just blow these all out at $10 right around my price target? So then you thinking going into OKLO, price target was around 62 for me, and you know, just because of the strength, I waited for a little bit longer, around 63, then got out. So anyways, now Rumble today, I don't know. I don't have an opinion on this. I have no clue. We're still in these calls. They're October 17, so it's a long time to expiration. $12 strike price. 80 cents. Those are currently flat. don't have an opinion. Let's look at this on a weekly chart. Yeah, I mean, this looks, well, this, oh crap. This looks fantastic this week so far. But, I mean, if this can close up this week, like close anywhere from 940 above, then I'd be super bullish and probably hold these, for the next week. Now, with that being said, if this can get back around $10 and go higher and sort of break out at this range, all of these people in here around $10 that bought around $10, because there are a lot of people that did, and they are just looking to break even. So if it can get around to $10 or $9.70, something like that, most of these people are gonna get out. And then if it goes above and starts rocking, they're gonna say, shoot, I should never have gotten out of this. I need to come in and hammer this hard, right? So that'll push the price much higher. So that's best case scenario. And that's best case scenario. Okay, so there's that. Okay, hello, Rumble. I'm kind of jumping around here. Since we're on the topic of riskier stuff, let's just head on over to SoundCloud. Again, I don't really have any opinion on this. If this can sort of move out, that would be fantastic. Again, this thing is building another massive base. This could have some serious jet fuel if this moves out, so regardless of if this trade works out or not, this is definitely one to continue hammering, because this is a stock that has serious jet fuel, like I said, and could be sweet. So let's look at this on a weekly chart. Yeah, see, again, this is good. Last week, great close. This week so far, I don't have an opinion on this right now. No opinion, still on the calls. I don't really know. So anyways, let's call September 19. It's the expiration. $12 strike price. 134. Those are currently 115. So those are down 8%, something like that. Okay, so we did SoundHound, Rumble. All right, now sticking with the theme, let's go over to Fubo. So, if you just sort of look at it like this is awesome. This sort of meets my criteria. It meets my eye. It goes with the theme of farther out on the risk curve. And see, that's the thing again, right? Where I'm noticing money is moving farther out on the risk curve. So I'm going to follow where that's going. Whether these trades work out for me or not is besides the point. I want to stack as much probabilities in my favor to have a trade work out. So, where you see momentum following is pretty much where I go. So, anyways, so Fubo, I think I placed these today. I don't think I did this yesterday. I think I did this today. And for what it's worth, Fubo has a decently liquid options market, and you can really hammer them. They're cheap. So, August 15 is the expiration. $3.50 strike price. So, again, a little bit out of the money. And 42 cents. It's average cost on these. These are flat. Got plenty of wiggle room on these to add, subtract, whatever. Let's look at this on a weekly chart. Oh, and again, I like sort of this, you got some, massive run up, nice sort of base, flat, whatever you want to call any sort of basing pattern. And then some sort of clear area of a clear risk to reward, and something that meets my eye and goes with the theme that I'm looking for. I have certain themes that I go after, like, nuclear energy, for example, or financials, although, financials aren't, currently what I'm looking for. But anyways, so this goes with the theme of farther out on the risk curve. It could work out. It could totally not work out, just like with any trade. So, let's see. Are we looking at this on a weekly chart? That doesn't do anything for me. I don't know. So whatever. Okay, there's that. All right, now let's go over something that is the opposite of farther out on the risk curve, which would be utilities ETF. Yeah, cool. These are hanging on in there. If this can turn up, this would be super bullish. Again, my price target on these is like 82. You don't need a big move in this for outsized gains. It's all relative. And the options market, it's all relative. So, the expected volatility in this is like 0. No, I don't know. I don't exactly know. So any sort of volatility is going to increase the price of the contracts substantially because it's all relative. So if the options market prices in lots of volatility, you need a monstrous move. And the opposite is true. If the options market isn't pricing in volatility, then any sort of small move will have a nice gain in the contracts. So, $82 is right around the price target. These are September 19, $83 strike price. So, $83 might have been sort of dumb. But anyways, $2 average cost basis. Those are currently flat. And I went from not stoked on these this day and really not stoked as these were selling off here on this day, but good close. And today they were okay. So I added to the position and we'll see if this works out. Weekly chart looks okay. Monthly charts looks pretty good. So again, not looking for a big move in these. However, utilities is definitely something to keep on the radar. It's sneaky good. It's in a fantastic uptrend with a massive consolidation period. So watch out for this. If this does move higher, this is going to be sweet. And it very well could on this move. We're at pretty extended levels to the downside. So yeah, it certainly could. Although this looks like it's, kind of in an area, is this going to roll over? Is this not going to roll over? Right. That's sort of the sort of a sweet spot for trades. I like to get in prior to the momentum really starting, prior to when it looks obvious, just prior to that. When it's really rocking and people are posting about the particular industry is when I usually like to get out. Like if you guys remember with XLU, back in here, I'm like, all right, be patient. We have to be patient. So I waited a couple weeks, and then this day, super obvious, which I missed down here to 78. But super obvious to go long. And the very next day I did. And, then XLU, right, rocking. And then right around here, 82, you start seeing people posting about how XLU is massively outperforming the SPY, the S&P 500, and that's sort of a, all right, I'm out of there. I'm done. Take your gains, get out. So, anyways, that's that. Cool. Fantastic. All right, let's go over Bitcoin and IBIT. So I'm still in all of these calls, all of them. And those are August 15 is the expiration, $61 strike price. Average cost is $485. Those are currently $537. So those gave back a decent amount today. Let's go over how we think Bitcoin looks. We think it looks just fine. Yeah, it looks just fine. Bitcoin really, really tracks NASDAQ these days. Although, in those last few months, it really was showing good strength. So buckle up. If this thing does move out and, maybe NASDAQ pulls back and some weakness in NASDAQ or whatever, for the next move up, look out, because this thing could get nuts. Yeah, this could get nuts in Bitcoin. So, yeah, I like the 120,000 price target. That is a price target that made sense to me, I don't know, 4 years ago at this point, I guess. And I still like that price target. I think that's pretty conservative and realistic, which is sort of how I trade, more just conservative price targets. So speaking of conservative price targets, let's go over OKLO. How did I come up with the $62 price target with Fibonacci numbers? Oops, those aren't Fibonacci. Here's Fibonacci. And again, I'm doing this conservative. I don't go to the top of the wicks or the bottom of the wicks, although that would make sense in this instance. I go where the meat of the base is. So we'll start from here to here. So you can see clearly the first target would be $62.15 based upon how I do it. And it's super conservative, and it's most certainly not the right way. I don't know if there's a right way for anything, but I'm no expert in Fibonacci numbers, not even close. However, this has worked out for me to take, the base, and then the first sort of number here. So since 62 was this first number, typically what I do is get out even before the price target most of the time. But on a day like today, I let this ride for a little bit. Clearly, I should have let it ride a lot longer. But so anyways, yeah, that's that. Okay. I don't even know what we were discussing. Oh, Bitcoin. Yeah, so, that's an asset class where if it's really moving, you don't have to, be conservative. Because that can rock and roll. But don't be greedy. See, that's the thing. It's a fine line between being, greedy and letting something ride. If you're honest with yourself and your emotions, you'll know. one of the quotes that I like from Jim Cramer is, I don't know if he made this quote up or not, but this is who I heard it from, is bulls make money, bears make money, but pigs get slaughtered. And I like that quote. I think that's a good one and sums up trading very well. So, what else are we in? Oh, Argentina. We're still in Argentina. I mean, come on. Yesterday, this was great. Do you remember? I think it was Monday. Yeah, I made that video Monday and said, we are in panic mode. We need something to happen with these. We're coming down to, we're like 37 days out, something like that with these calls, which is not a lot of time for me. Again, most people, I'm sure, would say we've never even bought 30 days out, let alone thinking that that's a short amount of time. But for me, it's a short amount of time. So yesterday, these were up like 2% and it was like, sweet. Then last night, this ETF was up another 2% after hours. So I was feeling good about these. Today, man, weak again, but not like terribly weak. We're getting some serious volume coming in. We're going to need a move one way or the other. There's a real tug of war going on, and whatever direction these move from here could be pretty big. So, again, see, typical theme with what I like to trade and look for in stocks is a move up, pull back, and, like I said, I want to give these every chance I can for these to work out, because these just reached all-time highs. It's given back a little bit, nothing crazy. This looks fine on a weekly chart. I mean, if this could move back over 90, then, I would have to hold these for another larger move. I mean, if these get over 90, we're going up to testing all-time highs. So, yeah. So that's that. Argentina, those are July 18, $90 strike price. 377, those are currently $1.92. So, chop chop, Argentina. Let's get your parties going, some barbecues. We need to get some bavette on the grill and get that country fired up, baby. All right. I think that's it. Longer term positions, waste management, GTX, waste management. Looks good. GTX, I think, looks bad. Yeah, it doesn't look bad. Is this just the start of a new breakout and move higher? Because if it is, that would be fantastic and this would be rocking and rolling. Or is this just going to give it all back? I don't really know, but as of now, it's respecting the 50-day moving average and looks okay. But all of this is very suspect. Somebody in here with size is dumping these shares. This is not a normal pullback. So I don't know who's in here selling. I have no clue. But it's somebody with a substantial amount of shares that have been unloading. So that is of concern. However, if you just, boom, zoom out, this looks sweet. All right, let's look at the monthly chart. Again, this looks sweet. So that's it. And now let's go over some sectors. We'll start with NQs. I got this all marked up for day trading. And, I don't know. I don't know. This could be forming a relatively bearish short-term pattern like this. like this. What is that called? A rising wedge? Ascending wedge? Which is bearish. But again, like we always say, patterns, they can morph. I still have the same opinion that I've had for a week or two in this is what are you risking to gain what? I still have that same opinion on here. So we're just, that's that. Dow Jones above the 200-day moving average, holding above the 200-day moving average. Is this a neckline that's broken out of? Very well could be. And so, that goes into the bullish camp. All right, let's go over here to our friend Russell, booted off of the 200-day moving average. Not a good sign. That would be bearish. Let's go over here to ES. And is this still kind of forming the same pattern? Yeah, see? I hate these patterns. It's a bearish pattern. Okay. So that's it. Now let's go over some sectors. So we can go over, we did utilities. Let's look at communications here. Nice. Cool. Uptrending. Go over to real estate. You don't want to see this rolling over from here, getting rejected off the 200-day moving average after consolidating for a long time around here. If this gets rejected and moves to the downside with some selling, gets below 40 or so, that's of concern for sure. Now let's go over to financials. Not a trade in there for me. Let's go over to regional banks. Not a trade in here for me. Let's look at biotech. No opinion. Not a trade in there for me. Healthcare. It's above the 50-day moving average, so that's a good sign, but not a trade for me. You'll see lots of people talking about, okay, this is above the 50-day moving average, that's automatically bullish. Above the 200-day moving average, automatically bullish. But that is not true. If the 50-day moving average is down sloping, or any moving average is down sloping and it crosses above it, that does not automatically make it bullish. So, okay, energy sector. Strong day. I think oil had a pretty strong day today. Had a very strong day. Jeez, how much was that up? 4.5%. Wow, it's got this gap up here to fill. All right, let's look at corn and look at some wheat. Not a trade in there. Wheat, not a trade in here. Let's go with copper. There's sort of a trade in there, actually. Copper, let's see. FXI. China, nothing really in there. China. Okay. Japan, nothing in there. Let's look at Germany. This looks good. Germany looks good. Mexico. Not a trade in here for me, but clearly uptrending, so it's nothing to really discuss or talk about. Let's look at nukes. All right. Let's look at Palantir. It's 136. Just hate to see it. Roblox. Roblox so strong. Let's look at Robinhood. Yeah, that looks good. Let's look at Shake Shack. And then we can go over some day trades and then call this one a day. We'll do this quickly. So first of all, CPI numbers came out. So anyways, that's it. So now day trading, if anyone, doesn't care about day trading, you can sign off. So, CPI comes out. I'm not placing any trades during the CPI. However, this is insane. Clearly, definitely should have. But anyways, so first trade place, some contracts and micros, because, on a news day like this, you could get some massive moves. So, first thing, let's see, 550 this morning. Yeah, all in here. This looked really good. So what's this, 555? Yeah, so right here, 555, 22,023, got out 22,032. It's a 10-point move. So nothing of significance, with micros. However, you grab a bunch of those contracts and it's still cool. Okay, so that's it for micros. We're over those. Now going over here to minis. At 6:01 this morning, 6:01. So yeah, so right in here. Oh yeah. No. 6:01. Is this it? Yeah. So right in here. Okay, at 2:20, 22,020, I went long with a stop down here at 22:10. It goes straight through 22,010 to 22,008. So basically the very bottom is where that order gets filled for a 12-point loss. And then just, oh wait, here, we should go on this 2-minute chart. 2-minute chart, and then just rockets higher. So at 6:03, so then, you place an order, it's filled at 22,032, goes all the way down 22,015 where I'm adding, and then get out at 22,027 a couple minutes later in here for about a net 6 points, which is okay. And then 6:48, we do another micro trade. 6:48. Yeah. So this massive selling, and then just rocket high. I mean, look at this on a 5-minute chart. This is such an obvious place to go after this, all the way down to below CPI, where everyone has their stops. Those are getting eaten up. So you have to place a trade here. You have to, which I did in micros. 21,926 sold at 21,988 for a 62-point gain. So all from here all the way up here, 62-point gain, huge gain. But again, these are micros, right? So, but hey, whatever. Huge, 62 points, monstrous. And then 8:35 in the morning. Where? It's in here. Oh, right here. 8:35, 22,016. Sold 22,025 for 9 points, which is chill. And minis, a 9-point move or 10-point move is cool. You look for a 10-point move, pretty high probability if you have a good setup to go after. A 10-point move is pretty high likelihood that that will occur, and that is fantastic. You know, and good. In terms of the dollar amount, it's good. So, yeah, you know, I would say overall, today was not a good day for day trading. Oh, that was it. That's all I placed. And then, you know, up here, things were looking really good. And I was just waiting for, you know, my setup to go after, which never came, and just got blasted to the downside really hard. So, you know, I just didn't go after anything after this. And that's that. So, you know, overall it was okay. It turned out profitable. So, you know, you can't complain at that, but you know, this was a day that really met my eye and my trading style, and I just sort of failed in executing the trades. Yesterday, for example, for day trading, none of it met my eye. This, where are we? I don't know. Yeah, I think this was in here. Yeah, so this is yesterday. This is how everything was looking yesterday on a 5-minute chart. There was nothing in here to do. And then it just kind of gets blasted and rockets higher and just kept going. There was just nothing for me and my style. Today there was. This was awesome, huge range. But yeah, I just didn't quite execute on it. So that's definitely something we've got to get better with for sure. And that's it. Tomorrow, I have no idea what to expect tomorrow. I'm going to wait to see what the opening range is like. You know, I don't really know. Don't really have an opinion. And that's it. And we'll catch you guys later.